All right, so g'day everybody, it's Dean here. What I thought we would look at in this video is how to set up a chart to start trading off. So we're going to set up some foundational support and resistance lines, work all the way back from the monthly in through the weekly, daily, sort of setups of support and resistance, then move into the 4 hour and start setting up some trend lines, and then we can sort of move in to look at what's happening currently in the market for some future trends. So tonight we're going to set up AUD NZD. So we'll start by going into our TradingView account. If you haven't got a TradingView account, just go to tradingview.com and set yourself up an account there. It's free to set up a TradingView account. Right in the middle of the page, when you log in, you'll see this little thing called the ticker. Okay, that's where we type in the chart that we're after. So we're after AUD NZD. All right, and just pick it from FXCM. Just pick the first one that pops up. Okay, you'll notice that this will update and load down here. All right, and what we want to do is, sorry?
I can only see you.
Oh, how come my screen's not sharing? New share, let's try that. How's that, Bronwyn? Can you see that now?
No.
Cool.
It's like up the top of the page, but you're the main person.
Unless you, well, maybe you need to move the pictures out of the way.
No, I haven't got any pictures. Nope.
I'll stop sharing and try again.
Yep.
How's that? Can you see my screen now?
Yes.
All right, thank you. All right, so here's the little ticker when you log into tradingview.com. Ticker, okay, AUD NZD. Okay, hit enter and just wait for it to update down here. And you can see we've selected the AUD NZD Forex chart. All right, and then select the full featured chart. This will take you into the charting features for TradingView. So every chart tells a story. Let me turn some of these off. We don't need them for this. And what we're trying to do is use that story to help us with future forecasting. So the way we start all the way back on a monthly time scale. And we want to zoom right out so we can see the entire history of the currency. Now for AUD NZD, it's only been trading since what, about mid-2001. November 2001 was when it got started. Some currencies will go back to the early 1990s, and obviously this one hasn't been trading that long, so there's not a lot of history with the currency pair. So that's all right, we start on a monthly chart, okay? And what we want to first do is just duck into the line setup. And the reason we just use the line is just makes it easier to find the points, okay? And what we're looking for are what we call two foundational points for the history of the chart. And we're looking for multiple touches on the chart. So there's probably one in around here. Okay, so we select our trend line. So trend lines you'll find over here, these are all your different indicators, not indicators, sorry, all your charting items. So we find a horizontal line. And this really comes down to a little bit of a guess to start with, but we're trying to find an area where it touches multiple times, where these peaks touch quite often. Now, personally, I like yellow as my monthly. That's how I've set up all my charts. I'm just going to be consistent with that. Label it monthly. Okay, now the reason why I went for this particular spot, you can see here we had a touch here. We've had a touch here. We just went slightly above it there. We had a touch here, a touch here, a touch here, and then there's multiple little touches around here. So that's the first one I really like. We're looking for a possible second, and I think we got one about here. Okay, so again, you can see we've got a touch here, We just overshot it there. We've got a touch here. Just over went there. Another touch here, just short of it there, and another touch here. So that to me looks like the two predominant lines. We might even put one more. What we're after is just two to start with. So we're just trying to find the ones that have the most frequent actions. Probably the hardest part is choosing your two foundational lines. Possibly there. Now the other rule of thumb is we don't want foundational lines to be more than 1500 pips apart. Okay, so at 1.0660 to 1412, okay, that's within the 1500 pip limit. Clearly that's not, that's well outside. Oh no, that's almost inside it as well. I'm actually thinking this is going to be our foundational range here. And that's possible there as well. What you'll find is that these, some of these, that might end up being a foundational range because the distance between there and that might be there, and then another one's there. You'll find that all these little points, when we set all this up, will be basically covered between a monthly and a weekly line. But I'm going to start with, let's start with these two to begin with. Okay, so once we sort of pick the best spot, I like to sort of jump back into candles. All right, and just look to see if we can make that spot a little bit better. So you can see here where it's sort of overshot. You can see here it's touched on some of the wicks. Here it's right in the middle of the bodies. Okay, and here it's quite nice. It's right at the top of the candle. So if we move it down slightly, say about there, it's very fiddly. Okay, now we're just hitting just the tops of the candles. We're hitting just below the candles there. We've sort of hit quite a few tops just in here. Remember, these are each candle's a month here. So there's a lot of time around that point, and you can see that's right around there quite a bit. And then for this bottom one, I think this bottom one's actually in a pretty good spot. Maybe just a touch up. All right, so we've covered off that little spot there. We've really covered off all the bottom of the candles. Some of the wicks went through it, but came back. Reached right down and touched on the bottom of that. I think that's probably a pretty good start there. Okay, so if we assume that that's going to be our foundational range, we just need to check to make sure that we are within our 1500 pips. Okay, so our foundational range will be the difference between 1.13475 and 1.06851. Now, if I'm sitting around a fairly close to a whole number, I will move that. So you can see here we're at 1.13475. I'd like to see what that looks like at 1.13500. Okay, so 13.5 cents rather than 13.475. So let's just put that there to remember where we were. Let's change that to, because you'll find that a lot of these foundational numbers hover around whole numbers, because that's what people remember in their head. Like you'll notice that line didn't even move. Okay, and 1.06851. Let's make that 1.07. Okay, 1.07. Does that really change it a lot? You can see just a very, very minor adjustment. All right. So our foundational range is between 1.73500, or just 50, and 1.0700, giving us a range of 650 pips. Okay, or 0.0650. Okay, so we're 650 pips. All right, that's perfect. Now, what we do is we take that foundational range, all right, and we use it, and we create more ranges along. So if we take this particular line and copy it and paste it, we now want to move it 650 pips away. So if we take our 1.1350, okay, so our next line will be 1.1350 plus our 0.065. That means our next range up, or our next support resistance line up, 1.135 plus 0.065 is 1.2. Okay, 1.2000. And if we do the next line above that, 1.2000 plus 0.065, that's going to be 1.265. Provided my maths is all right. Okay, so let's see how that looks. So 1.2, and then this one was at 1.265. Okay, we could probably fit another one in. So let's move that up to about here, and that's going to be 1.265 plus 0.065 again, 1.33. All right, and then we could probably get one in down the bottom as well. So if we move one down to the bottom here, so we're taking our bottom range, which is the 1.07. Okay, so remember that was the bottom of the range here, 1.07. We take off our foundational range of 0.065 to get us a point down here, minus 0.065, gives us one at 1.005. 1.0050. Okay, now look at that, right on the low. Okay, so if we switch now back to the line chart, again, this is where we're just sort of doing a little bit of massaging around. So here was our very first two lines, with these two. Now this one is picked the low, the wick of the low, come right down to touch it. You can see here that one picked up that particular high there. There wasn't too much more there, so it's not a very strong resistance line. But up here you can see it picked up a lot of these. Okay, and then up here it's picked up quite a few of the highs, and these will probably be wicks up to touch it. So let's just go back to the candles. So all I'm doing here is just seeing we've got the right range, 0.065, because it could be slightly different. Like if this range that we picked, these two, we originally picked the distance between these two at 0.065. If this was say 0.068 instead of 0.065, that little slight difference, that could mean the difference of actually hitting these particular tops, or maybe hitting these particular tops up here. So that's just what we're checking at the moment. We're trying to get the best fit on our monthly data, and we might need to tweak it slightly. Once we've got the monthly lines in place, then they're pretty much locked in. It'd be very rare we would never really change those. So look, I'm pretty happy with those at the moment. Anyone I would have liked to have seen is maybe have that come up slightly, which means that could come up slightly, which means that one could come down slightly. Just widening up that range a little bit. 1 second. All right, so what we could do is we could look to just slightly adjust these. So if we just slightly widen this range a little bit, I like that line there. I think that's in a good spot. This one could potentially come down a little bit. So if we were to move the 1.07, let's drop that down a touch. Let's bring that down to here. So now we've brought this little point into play just below this one. Let's have a look at what the wicks are doing. Yeah, we're picking up all those wicks there. We're touching all those wicks there. All right. Okay, so if we made that 1.0650, 1.0665, that would make our range 700 pips. Okay, which means we've got to go through and adjust every line. It's a little bit frustrating to get started, but trust me, once you get your foundational lines in play, when we start doing the weekly lines and the daily lines, they'll just all smash in really nicely. So going upwards, 1.135 plus 0.7. Too late at night for me to just do that in my head. 1.135 plus 0.07 is 1.205. Oh, of course, just add 50 pips. So we're going to add 50 pips there, which means we're going to add 100 pips there. So that's going to be 1.2750. And 1.2750 plus 0.0700 equals 1.2750 plus 0.07, 1.345. There. Okay, so this one we're going to move slightly up to 1.02050. This one comes up to 2750. And this one goes all the way up to 3450. Okay, and then the bottom one will need to move down. 1.065 minus 0.7 becomes, oops, 1.065 minus 0.07, 0.995. That didn't move. 0.995. Okay, so that's an alternate. That's touching that a little bit more nicely. That one we didn't move. That's okay. That's now just missing off the bottom of that. I don't like that. I think that one's grabbing the highs and the lows a little better. Okay, look, I think that's pretty close. Let's run with that. All right, so the next thing we do is we've put in all our monthlies. Now, our weekly support and resistance line, we actually just take the distance between each of the monthlies and we divide it in half. Okay, so we now want to run a line halfway between each of our foundational lines. All right, and these are what we call our weekly support and resistance lines. So I'm not even going to go to the weekly chart at the moment. I'm simply just going to draw in some lines equidistant between each one of these lines. All right, and then we're going to see how that lines up when we switch over to the weekly chart. So I'm just going to pause the video there whilst, whoops, I don't want to stop sharing. So I'm just going to pause the video. I'm going to add in all those lines, and then we're going to come back and then have a look at how that impacts onto the weekly chart. All right, so we've copied in all of our lines. What we've done, as I said, is we've copied in a support and resistance line halfway between all our monthly support lines. Okay, you can simply do that by adding the two numbers together and divide by 2. That'll give you a halfway point. And then the range between each of the green weekly lines is exactly the same as our foundational range of 0.07. Okay, so I normally just start at the top and then go 0.07, take it off, take it off, take it off. Now, it is important that you label your lines, your support and resistance lines, because when we start to scroll into the 4-hour, 1-hour time frame, all you'll have is just a yellow line coming across your page or a green line coming across your page. And you really want to know what they are. So I'd highly recommend that you label those, because when we start drawing in Fibonacci lines and trend lines and all sorts of stuff with different lines on smaller time frames, you really want to know what your monthly and weekly support lines are. I also try and get in the habit of using the same color combination on every one of my charts. So as I'm scrolling across different charts, if I see a big thick yellow line, I know we're reaching a monthly support or resistance line for me, and the green sort of camouflagey army color is my weekly line. I use blue for daily and red on my 4-hourly time frame. So I get used to seeing the colors, and I know what time frame the charts are using. The other thing I'd recommend is that you lock these. Once you're happy with the position, is that we lock them in place. But what I want to do first, I haven't gone to the weekly. Let's now move to even before we go to the weekly, let's just have a look at the line chart. Now see how these weeklies have picked up, like without even, like, the weeklies are just simply equidistant between the yellows. Look how they've picked up all these other particular points. You know, there's one here, picked up this one, picked up this one. There's probably a few candles coming down to this one, picked up this little action around here. I'm thinking there's going to be some wicks that have gone up to that particular green candle. Another one there, picked up that one. Right. So, like, this is why it's important. If we get our yellow lines right, our green lines, our weekly lines, should just pick up all the other support and resistance points quite well. Okay, again, if we just sort of look at the candle base, you can see our green lines have picked up all those sort of tops, picked up all the action along here, picked up the action here, picked up all the action here. And I reckon if we run a line up on the green, I reckon it'd be pretty close to hitting that as well. 1.31 plus 0.07, 1.38. Oops. And that's going to be, the coordinate for that is 1.38. Bang. All right, look at that. That picked up, like, that is the high. 1.37951. Like, that's 5 pips from that green line. And, you know, 20 minutes ago, we didn't even know what that green line was going to be. So you know you're in the right spot when your lines are hitting. Now, we could spend hours just tweaking these within, you know, 5 to 10 pips, because each of these will then flow on, right, and adjust slightly, and you can get it really, really tight. But at the end of the day, we're just looking for foundational ranges, because I think we've got them fairly close to the mark. If we see into the future, if they're not happening, we can always adjust them. But you can see here, just over the last, well, what, since 2014. So what's that, 4 years, 4.5 years, we've just been bouncing between that yellow line, tried to push down to the foundational line, back up to it, and we've just been bouncing around between these green foundational lines. So if that's all you drew on your chart, okay, you could sort of have a bit of a guess. You think that this is going to go up to about here, and then it's going to come down about here, okay? And that's like, there's a year forecast for you. All right, up a little bit and then down. So this lets us know that on a bigger scale, in the monthly scale, we're in a bit of a sideways movement, okay, between here, and here. But let me tell you, there's a lot of pips in that range. Okay, and a lot of money to be able to be traded. So let's go to a weekly. Now, we shouldn't need to adjust any of our lines based on the weekly chart. It should just give us more confirmation that we've picked up a lot of those areas. So if we just zoom out a little bit, all the way back to our start of our chart, 2002, there we go. Okay, you can just see, again, a little bit more detail. We've really picked up those wicks there. We've picked up the wicks there. The greens have really lined up nicely. So if the greens have lined up nicely, that means our yellow foundational monthly lines are in the right spot. All right, if they were sort of greens weren't even close to anything, you know you don't have the right foundational lines. So I'm really happy with those. There's a lot of these that touched right on it. I think we're in pretty good shape. So what I'm going to do now is I'm going to lock these all in place. So I'll just simply come in, go to my settings. You can either click the little cog for the settings. All right. Actually, I don't need to do that. All I've got to do is come across next to settings and hit the lock button. Now, the reason why you want to lock it is because you have so many charts and lines and stuff happening on your page. The last thing you want to do is move any of your foundational lines, because we've just spent half an hour trying to get all those in the right spot. And if you're a little bit anally retentive about getting in the exact spot, you could spend, you know, another hour just tweaking the yellow lines first and making sure that you really get them in the right spot. I'm not that specific. I think we're pretty close. I think we've got some good weekly and monthly foundational lines, and I'm happy to lock those into place. All right, the other thing I'd recommend, I've learned this over time, is write down your foundational range data, at least some of them, okay, or at least at a minimum, your very first one. Okay, now the reason for that is quite simple, that if for whatever reason it doesn't save, TradingView doesn't save, you lose your chart or whatever, and you got to start again, it's really, really handy having that detail. Okay, so I'd recommend that you write that down somewhere, so that if you do have to start again and rebuild, that's the hardest part, is actually putting that together. I'm just going to make sure that we've saved by clicking this little button up here. Waiting for our tick of approval. There we go, and we're saved. All right, so now what we're going to do is move into the daily time frame. So if we, oops, what was that all about? I don't know what happened there. Okay, into our daily. Now, our daily is more important, is really what we're looking at is over the last, you know, the last few years, what our daily has been doing. We don't need to go all the way back to the start of the chart. We've set those through our monthly and our weekly time frame. Now, what our daily does is start picking up, again, some minor resistance points. You can see here, all right, there was some few highs in here, a couple of highs in here, a few lows in here, another high in here. So there's clearly a minor support and resistance line in around this particular point. This is what our daily chart will pick up. Again, you can see them across here. All right, there's some other ones. So let's start putting some of these in. I use blue for my daily period. Now, these aren't measured from a certain distance. They just simply where you believe there's some support and resistance. So I definitely think there's one in there. Okay, now you'll also know in my visibility sort of stuff, I actually make the line a little bit thinner. Okay, and I change it to blue. And then I'll label it daily. Okay, now why did I choose this point? Okay, you can see we've touched on some tops here, just broke through there a little bit. We've got a little bit of support there, in there. So really around that spot, you can see there's a bit of a support and resistance happening. Again, I always like to check just on the line. The lines don't pick up the wicks, okay? The lines are to the body of the candle. It just allows you to get rid of some of that clutter on your screen. It just allows you to sort of focus that in a little bit more. I think that's a pretty good spot there. I think we've picked up We've picked up a lot of lows in around here. We've picked up a few of the resistance points, picked up a lot of support here. Another one there, another one there. I think that's a really good spot. So I'm going to lock that one into place. I'll copy that. Now, the reason why I like to copy and just don't put another thing on is because it keeps the wording already there for me. I don't have to keep writing it all the time. I think there's another one here. You can see, oh, didn't move. Oh, because I locked it. All right, so unlock. All right, so we've picked up a little resistance there, resistance there, resistance, a little double top there, resistance there, a little bit of support there, support there, support there. Just overshot slightly. So again, I think that's a nice little blue spot. And every so often you find that your dailies will be sort of like 1/3 of between the weekly or the monthlies. Okay, again, if it looks like it's breaking into thirds, then use thirds, because that again will show you that the market moves at a rhythm. Okay, all markets move in a rhythm, both with price and time. And the idea as a trader is to try and work out what that rhythm is and then trade with it. Let me get rid of that. I'll just copy one and control it. So I think there's another line there, and then we've probably got another one. So here's a good example. So you can see that between this monthly line here and this weekly line, these two daily support lines, I reckon they're pretty close to being about the same distance apart for all three. Okay, so let's have a bit of a look. I have no idea if they are or not, but let's test. So we've got our monthly line at 1.0650, and we've got our weekly line at 1.03. Okay, now we know that's going to be halfway between 0.07, because that's our foundational range between monthlies, and we know the weekly's halfway between it. So that's going to be a total of 0.35. Now, if we were to divide that into thirds, okay, 0.35, and divide that by 3, that's going to give us a little range of around about 0.12. 0.035 divided by 3, 0.0117, or 666 recurring. Okay, so all I've done is taken that particular distance between there and there, and I've divided it exactly into 3. All right, and it told me that it should be around about 0.0117. All right, in thirds. So if I was to take 1.065 minus 0.0117, that would equal 1.0533. And then if I was to take that 1.0533 minus 0.0117 equals 1.0416. Take off the last range. that'll be the 1.03, which you already know is correct because that's our weekly line. All right, so if I move these to 1.0533, move the second, I don't need to open that, sorry. If I move it and move the second one to 1.0416, all right, now those lines are exactly 1/3 of distance apart, okay? And you can see how we've still picked up all those key points, all right? But it's starting to let me know that there's a bit of a rhythm to this particular chart, all right, at 0.0117 is a bit of a rhythm, okay? It likes to bounce a little bit between that, and then it does a little bit more. And I reckon if we played with this a little bit, we'd probably find that that would work into a pretty similar range. So let's have a look at that. So 1.065 plus the 0.0117 is 1.0767. Now, I was pretty happy with that line there, but I'm going to shift it. Let's see what happens. 1.0767. Okay, so that moved it quite up a little bit. And this one would be plus 0.0117, 1.0884. Okay. So you can see those blue lines, they're still topping across here. They're picking up the support, offering resistance. I really love it when the dailies operate between the monthly and the weekly, and they split it in equal distance, because it really shows that there's a real rhythm to the chart. Now this one isn't on our 1/3 line, and I reckon if we pop it up, we're going to pick up all of these across here. So again, let's have a look at that. 1.1 plus 0.0117, 1.117. Bang, bang. All right, so I'm pretty happy with that. Oh, and we'll probably need to do one more just to finish off between those right, because obviously we're going to be heading up into this direction, so we're going to need this particular daily one drawn up, 0.0117. Somewhere up around here. 1.1234. Okay, so there's our chart down to the daily level. Now, as I said, you don't have to have the dailies at a fixed equidistant point. I just think it still ties in quite nicely. And as I said, the markets tend to move in a bit of a rhythm. So if you wanted to go for your own particular touch points, feel free to do that. That line, there's absolutely no reason why that couldn't come down a few pips to just pick up those real baselines across there. All right. And that probably is a slightly stronger point. All right. So I've just moved them at the 1/3 distance to see what they look like. I think they look pretty good. I think they could be adjusted. Okay. I think either way would work. I'll leave that up to you as the trader to decide if you want them equidistant apart or matched up to certain lines. I'm going to pause here. I'm going to move them into what I think is slightly better positions, and then we'll come back and we'll look at the 4-hourly. All right, so I've locked those all in. I've just adjusted them slightly to where I think they're slightly better fit to support and resistance, and then I've actually locked them into place. So again, the next step, we just move down into time frames. I don't need that particular data anymore, and we move down into the 4-hourly. All right, and this is probably the last level that I do straight horizontal support and resistance. Again, we don't need to go back to the start of the chart. We're just looking what's happened, over the last sort of 9 months to 12 months on a 4-hourly chart. These are the ones you will need to adjust dailies every 6 to 12 months, and 4-hourlies you probably adjust every 4 to 6 months as you get different rhythms happening. Again, you can see that there's support and resistance on a 4-hourly time frame in around here, for example. All right, we're pretty much coming down to a 4-hour time resistant. You've got another one in around here. All right, so this is why we work all the way back, all the way forward, okay? But we know that the monthly and the weeklies were in the right spot because we saw that. So let's just start putting up a couple of 4-hourlies. There's definitely one in here. Okay, I think that's a pretty good spot there. I like my 4-hourlies to be in red, and they're the thinnest of all lines. Okay, and that's my H4. There's another one just in there. Okay, again, you can see it's picked up that low there. So support, support, support. Used to offer resistance over here. Resistance, 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 resistance. Okay, I don't think we really need to go any lower. The market's all the way up here at the moment. And obviously there's one more we want to put in, which is our current 4-hourly resistance line right in above here. Okay, and you can see previously it offered the same resistance. All right, I'm pretty happy with that. Maybe another one here. I'm going to call that's just a localized support and resistance level. It hasn't really caused any problems other than that little time frame in there. That was it. When you sort of come down to the 4-hourly, you can start to see that the daily could move up a couple of pips, maybe to there, for example. Now, because the daily is not fixed in stone, unlike the weekly and the monthly, you don't adjust the weekly and the monthly. You could just simply adjust your daily a little bit up if you wanted to. I think there's probably value in that, to be honest. Okay, that's probably even a better spot there. Lock it back into place. All right, so that's our chart all done up with our key support and resistance lines. All right, next thing we want to do now is actually start to get some trend lines into place. So there's no point like doing trend lines all the way back here. That's history. All right, that's February to May. But clearly at that time, all right, there was a bit of a trend line happening, over here. All right, we broke through that trend, bounced off the daily. All right, we started a new bull run. Okay, there's no point going all the way back into there. All right, it's done and dusted. So what we need to determine right now is on the 4-hourly is what type of trend we are in. Okay, clearly we're in an uptrend. All right, we had the low from down here. We had a new high. All right, we had a new lower low. Sorry, a new higher low, higher than that one. Then we had a new higher high coming up. We had a new higher low. All right, and we've had a slight change in trend coming down. All right, but then we've resumed the uptrend. All right. Looking for some trend lines. Again, these are quite subjective. I generally try and like to run trend lines off previous highs and lows, off key ones. That was a key low area here because that's been the low for the year. We'll go back and check January, but I can't see January being lower than that. So that's running off the yearly low. Now I'm going to move it. Let me just check. Let's just double check. All right, so there's the start of 2018. In fact, let's zoom out to when we were ever down that low, if ever. Oh, yeah, we've been lower than that before. Back in, when's this? 2017, okay? But clearly that is the current yearly low off there. So that's definitely somewhere where we want to run a support line from, or a trend line, I should say. Because that low is going to be in play for quite a while, quite some time. Now that that support line is probably more important than just what that first line I drew, so that's why I took that one away. What I want to do is actually just simply run a parallel line to that, and then we've got what we call a channel. And I reckon that's roughly equidistant in between that channel. And you can see there's a lot of activity happens around that particular point as well. So again, these are just key points we're looking out for, trying to give us a bit of indication of when there's going to be some market action. That's probably all we really need on the 4-hourly at this stage. The last thing I would probably do is just look to have a key Fibonacci ratio. So at the moment, that's our, where's our yearly low? Let's zoom out so we see our yearly low. There it is there. So that's our current yearly low. And that's our current yearly high. All right. So we could run a Fibonacci retracement from that to that on our current yearly data and see what's happening in terms of that movement. But I think it's probably more important off the 4-hour chart is we run it off the last push up. So the last push up started down here. You can see that sort of, we had that impulse up and now we're retracing. All right, so I'm going to run a Fibonacci on a 4-hourly from the base of that up to the top of that. All right, and that's our fundamental 4-hour Fibonacci rate. You can see we're starting to get a lot of lines. This is why it's key to have all your chart labeled. Otherwise, it just starts getting confusing and just looks like a mash of lines everywhere. So interestingly, look at some of these things that are starting to line up. First of all, our 50% line is very, very close to our weekly line. You know, that's interesting. It's also interesting that over that previous range, starting in late July, so that's been our early August run up, we've retraced about 61%, right? That key Fibonacci support line. So let's zoom in. So what we would expect here is we've obviously had that impulse up, okay, and we've had a bit of a pullback. All right, we've now pulled back to the 61% mark. We're also pulled back to roughly where this resistance line is. Support line is going to be. So you can see that right around the support line, we've got 61% retracement of our current run up on the 4-hourly. We've got this support line. We're just slightly below our weekly. Okay, so I'd expect this to move back up, you know, in the next couple of days. I don't think it's going to spend too much time below this weekly. You could almost say, and I think when we go to the 1-hour chart, we're going to see another 4-hourly support line right around our 61. Look at that 61 there. If we extend that 61 back, look at how we pick up all these along here. All right, pretty interesting. Nothing happens by halves. As I said, the market moves in a rhythm. We're just trying to find the rhythm. Now, generally, I trade off I chart up all the way to 4-hour. That's about as far down as I go. All right, now I start looking for key points to move in on with the 1-hourly time frame. So let me just reset that chart. Zoom out. All right, there's our run down. Okay, so this is where we've had our most recent low, our run up. And there's our pull back to, look at that, right around the weekly point. It's broken through our weekly. So now the key part of the trading is, all right, what next? Like, how do I make money out of this? All right, and this is obviously where your 1 hourly chart frame comes in. So some of the things we're looking for is a potential run down or touch here into that 61, which it has already done, and into that particular resistance line, sorry, support line. Okay, so we would expect there be support off this. We'd expect support off the 61. Okay, so right now, I actually believe AUD NZD is in a potential buy scenario. But I would like to see this actually come right back down to the support area. Okay, so and this is the challenge with the trading, is you don't want to get in too early. You want to let it finish playing itself out. So we're expecting some action in around here. So this is basically just to an alert to let us know, right, now's the time to start watching what happens. The final thing we start to look at is what we call the impulse, consolidation, and continuation action. So we know something's going to happen between the weekly, the support, and the 61. That's fairly key. Well, I shouldn't say we know. We expect something to be happening. So on the 1 hour time frame, we're clearly in a downtrend. Okay, we're getting lower highs, lower lows. We're in this sort of consolidation along here, and now we've had another impulse down. Okay, so if we just look at that, we've had this. Oh, that's an ugly line. Let's go to solid, thank you. Let's go for something a little bit bigger. And our current movement. Okay, probably not big enough. Really want something that stands out. White will stand out nicely. Okay, so we've had that impulse down. All right, and now we're in this sort of flag period. There's even a sort of minor flag there with our next impulse down, but I'm just going to call all of this a bit of a flag. All right, now we've had our next impulse down. All right, and what we're in now is another flag. So we've got another flag forming here on the 1 hour. So it's quite possible that we could have another little push down. And I would expect that push down to sort of trigger into that. It could happen obviously anywhere along here. Into that resistance line. And then from here, we've got to look for a potential change of trend to then push back up. If it breaks through this and we're breaking into open territory, that's where the Fibonacci would sort of go out the window, and we'd be looking for a retracement all the way potentially down to the daily. Okay, so that's why we can't trade off this straight away. All right, we've got to be looking for signs of either continuation down or a potential change of trend. How do we do that? That's where we start watching. We're starting to look for either on the 1 hour time frame or right down into the 15-minute time frame. We're looking for market movement. So right now inside this flag, okay, we've got this market movement happening. We want to see which way it's going to break out to, all right, and then we can start to make a bit of a decision. If it breaks out to the high side, okay, let's say it goes down and then breaks up and then it sort of comes out of here. All right, what we would be looking for is we'd be seeing that this is a potential change of trend back to the upside. We're still not getting in yet. We're waiting for the retracement because every time we have a push forward, all right, this is where we'd want to get in. Okay, this is around a key weekly support zone. Here's our 61% Fibonacci line. All right, here was our resistance line. Our resistance line off that flag. So anywhere on one of these sort of three, we'd be looking for a potential trend. This is where we'd look to buy. All right, this is where patience plays out. Okay, so that's option one. All right, we wait for it to break to the upside. We wait for it to retrace. No retracement, no entry. All right, and then we get into the market and we take it off that way. Now, if the market continues down, all right, so if the market does do its next impulse, all right, because we're in that flag period, if it does do the next impulse down, all right, we're simply looking for a sell stop. In around here. Now you can see that the flag's being formed in around this area. If it breaks through that, we take a sell stop, 5 or 6 pips below that particular line. All right, and we could run it, down to the support line. All right, or we can even run it all the way down to the H4. All right. Now, a lot of people try and grab these right at the top. Okay, if you were to try and do a sell limit right at the top here, yeah, that's great. What you want, but, is to have a very tight stop. Okay, because as I said, this could potentially break to the upside, bounce off the 61% line, and keep moving up. All right, there's certainly evidence to support that that's a potential possibility. So if you were to try and get this next impulse run down, okay, you'd want a really tight stop. All right, so take your sell limit in here, have a nice little tight stop. If you put it just slightly above the weekly, how many pips would be at risk? 1.0985. All right, so if you had a sell in at 1.0985 and then put your stop loss in at 1.1005, 5 pips above our weekly support line, you're at 20 pip risk, okay, to grab that nice and early to the downside. All right, you could even put in a stop and reverse. So you would have a stop order, you'd have your stop loss here, but you'd also simultaneously have a buy stop. Okay, so it would stop out your sell to the downside. All right, if it come all the way up here and triggered, okay, above, all right, you'd be in the market relatively early. Again, that's a high risk because you're really looking for that break up and the retracement, and then take the trade. Okay, so there's many options depending on how you want to trade, your risk level and your risk tolerance, your account size, how you want to look at it. But look, that's basically how you set a chart up. We can now look at this chart moving forward and try and work out, obviously, where we can profit, where we can take our next trade. As different trades play out, like obviously this one's already finished. We wouldn't leave these around. Okay. Excuse me. As the trade continues to play out, we can then make more decisions based on that particular time frame. And that's really about it. That's what I wanted to show you. Let me just get rid of this stuff. That's how you mark up your chart. I would then use this going forward. Might even leave that particular flag in. Let's look for the next impulse down. Part of my trading rules is I generally only like to trade in the direction of the daily and the 4-hourly. I don't look for the counter trend trades at this stage. I just simply want to trade in the direction of the 4-hour and the daily. So for me, the daily chart is, let's have a look. All right, the daily chart is in a upswing. Okay. The 4-hourly chart I think it's in a slight upward movement. Okay, we're just sort of slowly moving up here. So I'm looking for buys, okay, not sells. So I'm looking for when, if this is going to sell, break down slightly more to the resistance line, I'm not looking to make that trend. Okay, take that trade. I'm looking for the bounce off, okay, and then the move up. Always looking for the retracement for confirmation, and then the move up. So you can see how often it does that, you know. Here you're looking for the comeback. It's came back. That's where you would take the trade up. All right, came back here, take the trade up. Didn't get a lot of run out of that one. Take the trade here, come back up. So once it's made that first movement, it always retraces back to it to test it. And you can see, like, on the H4 support line or resistance line now, it's come back up, it's retested it, So this would have been great opportunities to take a sell for a counter trend trade on the way down, based on this whole impulse, flag, impulse. Hopefully everyone can see that. There's the impulse down. There's the flag. And then you would get in that trade on the breakout of the flag. You could almost take that bounce off there. So look, certainly some sells in there at the moment. I'd only be looking for the buys. All right, I'll add in the counter trend trades, you know, as I gain more confidence with what I'm doing, gain more confidence with the chart. You know, that's when you can add in different skill levels to your charting and what you're doing. Look, I hope that was helpful. Leave some comments below. I'm going to throw that open to Bronwyn, who's listening in. Bronwyn, have you got any questions, anything that didn't make sense that I can cover while you're here? Because obviously there might be other people that have questions that you might be seeing as well that I didn't cover properly.
No, I think that all looks good, and at least it's recorded so I can go back and watch it a couple of times. So that's fantastic. Thanks, Dean.
Excellent. All right, well, I'm going to leave that there. As I said, if you've got any comments or questions from what we've covered, please leave them in the chat window. And hopefully that was helpful. I'd recommend that you sort of start just with 2 or 3 charts, get to know those in depth. And then once you've got a feel for those, you can always add more charts onto it. But there'll be plenty of signals, plenty of opportunities just on 2 or 3 charts over the period of time for you to get into. So thanks very much for watching. I hope that was helpful. And yeah, leave any comments or thoughts below. And anything else you want me to cover, let me know. We can do up another video to cover those. Thanks very much.